Good morning, traders and investors. Roger Scott here, senior strategist for the Trading Pub. Got to have some fun here, right? It's September 28th. It's Thursday. It's about 7:57 in the morning. The market's going to open up in about an hour and 33 minutes last time I checked, unless someone pulled the rug underneath me. Folks, before I get too deep into this, make sure to subscribe to our YouTube channel. Go to YouTube and then type in Roger-Scott. It'll show up. Click the bell. You'll get these notifications right away when I post them up there at about 8:20 in the morning. Second, subscribe to my Telegram channel. I give a lot of free trades, pictures of my furry trading assistants, and other really good actionable stuff that you could use to potentially make money on. Go to rogerscott.com/Telegram. Most importantly, if you have a question, post it below this video. I will respond and everybody will see it. I have very little filtering, so everything will go up there, unless it's something really bad. And then it'll actually, even more likely odds of being up there. Anyway, let's get off of that topic and let's talk about all of this. So the market's down about 50 points overnight on the Nasdaq, a little bit beyond random, but nothing too crazy. The Dow's down only 18. This is a good sign. We do have some consumer discretionary earnings. We've got Nike coming out. We've got a couple of other stocks. I'll talk about it. So you really need to watch the consumer discretionary sector. Also, you got to keep an eye on the bond market. The bond market just made a new low, which means interest rates, long-term rates, are making a brand new 52-week high. This is what's putting a lot of pressure on the tech sector and on consumer discretionary stocks, because higher yield, it's more pressure on the economy. That's something that's going to really bug us today. Yesterday wasn't that bad, but we did make a new low, and today as well. I'm hoping, and when I say hoping, that's a very dangerous word, that we're going to go higher. Meanwhile, volatility appears to be holding on. The day before yesterday seemed to be the big day. We didn't spike so much yesterday, so I believe we're going to be coming down. And one of the reasons we're going to be coming down is because I believed that the Dow, and I showed you this, I drew this line yesterday, and I said this line has a lot of support, I mean, look at this. You've got like a whole world over here. It's going to be very hard for the Dow, the blue chips, to break these levels. I know we're below the 200-day moving average, but I really like how we closed yesterday on high volume. The market really wanted to go up yesterday. There was a lot of buyers coming in second half of the day. I'll show you that in a second. Actually, let me show you that right now. Here's the SPY, and here's intraday look at the SPY yesterday. Look at this. See these three green candles? This is first half of the day, and these three big candles. This is real buying coming in. This is buyers saying, we want to buy at these levels. This is not monkey business right here. This is serious buying. Three green candles that are completely full without any overshadow or mostly overshadow. That's big. And then what happens? The market consolidates for about 20 minutes, and boom, we go up again. And then we didn't really come up all that much down. We stayed high. So there was some commitment yesterday from traders at the second half of the day coming into the market. Real strong commitment. This is all monkey business right here. But this, three of these, consolidation, another big bar like that, and it held half of it or even more than half, that's real meaningful. And I'm not being wishful. I'm going to tell you how it is. I think we have just as much exposure to the short side as long side right now. But I do believe the market is not going to make a new low today. I think it's either going to come in and have an inside day or potentially start moving towards the 8-day EMA, which what I would like to see happen. Let's look at the QQQ just to kind of show you the other side of the coin. We look at the line I drew for you guys. Look, we're exactly at that line right now, and we backed off. Now, there's also a lot of support for the QQQ around this area. A lot of support around this area. So I think we're going to hold. I know a lot of folks are thinking this is just a bear trap, and it may be. It may be. We won't know for sure till we get to about the 50-day moving average, which is quite a whiles away. We need a real strong commitment from the market. Otherwise, it's just going to be hunkering down. But today, I'm not expecting anything really crazy unless the Fed data is awful, and I mean awful. Looking at the SPY, it's important right now to look at technicals because the market is being driven by this. Again, look at what happened. Look at where I drew this line and look at where we closed. We closed above that line, and right now, we're still above that line. So I think we're either going to have an inside day or we're going to go higher. And again, a lot of that will depend on where we're at. Energy is holding up beautifully. It's actually up again overnight. We have a couple of really good positions in energy we may want to get rid of today. I think energy is going to make a a swing high. I'm not very concerned about the energy levels. Now, economy, you've got GDP today, and you've got core GDP today, which is going to be very insightful. Personal consumption expenditures and quarter over quarter. Here are the estimates, but this is very market moving. This is one of the biggest reports of every 6 weeks. So we need to pay attention. It's coming out today. Home builders, they held. Semiconductors, let's take a look. Micron had some bad news, but let's take a look if they held. They held. So for now, we are holding. For now, we are not having a bear trap. But again, if we start breaking these lows and start heading down towards the 200-day moving average, it's over. Again, I was very much encouraged by this trading action yesterday. Very encouraged by these three bars, consolidation holding the top right here, and then another bar. Very, very impressive. Let's see if that's meaningful or if it's my wishful thinking. It can go either way. Let's talk a little bit about the economy. Participants are gearing up for a flurry of U.S. economic data while waiting for speeches for Fed officials and earnings reports from Nike. Now, Nike, I believe, to the best of my knowledge, is coming after the close today. So it'll have a bigger impact on tomorrow's trading day than today. And Nike's a big company, not just because it's a big company, because it has a big exposure to consumer discretionary. And if Nike starts showing that there's a lot of selling pressure, this can cause the consumer discretionary, which is not doing really great right now. And that looks like it can go to the 200-day moving average. And there's actually a lot of support around the 200-day moving average, but nothing really here. That can cause more downside. Technology-wise, let's see here. Do I want to go to communication or just go to Y? Let's just go to XLK. And you'll see that it's also right in between. It's below these levels. So I'm a lot more nervous. I'm a lot more nervous about consumer discretionary technology than I am about the blue chips right now. And if you look at StockFetcher, you will see energy, healthcare, communication services, but where's consumer discretionary? Where's technology? See that? Not good. And if Meta and Google takes a dump, oh boy. So blue chips are controlling the market right now. There's very little doubt about that. Let's talk a little bit more about what we're dealing with today. Blue chip stocks dropped to a 3.5-month low. If you think that QQQ and the SPY did much better, you're sadly mistaken. Crude oil prices made a 13-month high, and I think there's more downside. Durable good orders unexpectedly rose. Core durable orders came in higher than expected, which means there's more demand, which is good for the economy. Now, here's the wet blanket. Kashkari stated Wednesday, I want to ask him, what model are you using, buddy? That's what I want to know. That the U.S. government shutdown or a prolonged strike by automotive workers could slow down the economy, obviating the need for the Federal Reserve to employ its tools to ease price growth. If these downside scenarios hit the U.S. economy, we might then have to do less with our monetary policy to bring back inflation back down to 2%. I don't know. We'll see. I don't think any of that is going to happen. U.S. futures are now pricing in a 22.4% probability of a 0.25 basis point rate hike in November. In December, 36. This is moving higher. It's moving back to the 40. I think this is going to go above 50%. Probably by mid next month, if things stay the way they are right now. We've got Nike earnings. You've got CarMax earnings. You've got J-Bill earnings. We're going to be watching these tonight or tomorrow morning for potential day trades. I love after the market, after earnings day trades. But today we're going to be talking about Micron and Workday. We're not there yet. Today, we're focusing on the GDP, big number that's coming out in about 24 minutes. That's going to set the tone for today's trading session. We also have pending home sales, which are, they're doing okay. They're holding on. But let's see how home builders do after this. U.S. jobless claims is going to be a nothing burger. And we've got more peanut gallery, including Goolsbee, Barkin, and Cook talking. Europe is falling. 6th straight session. They're following U.S. Limited the downside on Thursday. Following the U.S. Energy shares gained ground following the U.S. after a drop in crude stocks in the U.S. underscored a widening global deficit. China closed slightly higher. We're getting a little tailwind as investors exercise caution ahead of a week-long holiday. Chinese property developers continue to decline. And yes, that's a global issue, not just a China issue. Nikkei close sharply lower, hitting a 1-month low as risk sentiment took a hit on concerns about the Federal Reserve maintaining higher interest rate policy, and tech and material stocks led the decline. Not good, while energy outperformed. Energy is doing great. So let's talk about some day trades today. I gave you levels. I explained to you that today's date is going to really set the tone. And if we can come up back above these levels, we're still above the 200-day moving average. We're right at the 200-day moving average on the Dow. If we can start coming up from these levels, I think the Dow has bottomed out for the time being. This is a shakeout reversal bar, and we're below the 200-day. There's a lot of support here. The QQQ, again, we're right there. We can go one way. If we break this level, the 349 level, we're going to the 200-day, but we have a lot of support around here, and the SPY does too. So again, I'm not sure. I can't say for sure if this is a bear trap or not, because for now it looks pretty good. It could end up being one, but I think this level is going to hold, and I think we're going to, as I said earlier this week, we're going to continue moving choppy because nothing really changed. Nothing really changed in the economy in the last 3 months, and we've been going sideways. If something had changed, maybe the workers' strike, maybe the debt ceiling, but in terms of the economy as it stands right now, we haven't had any changes in the last 3 months. All right, I'm getting overexcited. Day trading stocks. Micron came out with earnings. They were bad, but Micron is hitting very close support levels. So here's what I'm going to tell you about Micron, all right? Here's how Micron's been trading overnight. Wait till 10 a.m. and look at the high of the day on Micron. Put a buy stop above that level. And if it hits it, it hits it. Keep an eye on it. I'll update you. I'll update you on Telegram like I did with Costco all day yesterday. If not, then not. Now, if we break the low, we're going to go short Micron because it means it's going to come down to here. So we're waiting to see what it does at 10 a.m. If it's still inside this area, whatever the first half hour is, we're not going to do anything. We're just going to sit tight and wait. We want to see it break above or below the 30-minute high or low, okay? And I'm willing to take this one either to the upside or downside. I don't care. I'm neutral because I'm between the 50 and the 200-day moving average. If I was above the 100 or the 50, I would only go up. But here we can go either way, and either way would be okay. So again, up or down. But wait for the first half hour. Second is workday. Now look at workday. This is interesting. This bottomed out to the 200-day moving average. The 200-day moving average has a habit of holding. If it goes below the 200-day moving average, I really wouldn't want it. And this one, I think, is a little bit oversold, so I would only take this to the upside. Micron, both ways. And Micron's only down at 4%, so it can go further or less. But this sucker, we only want to take to the upside. And look at overnight trading action. I want this to trade above. Let me show you what I want it to trade. I want it to trade above the 211 area, or 211. And I want to wait for the first half hour. 210, about 211. 210.80, 210.95, closer to 211. Let's see what the high. See the high right now? The high is right now 210. I want this thing to turn around and prove itself and start going higher, much like Costco did yesterday. So I think there's some day trades here, and I'll update you intraday. If I forget, just send me an email and I'll update you. But Workday and Micron are the two stocks. Workday only to the upside after the first half hour, and only if it's taking out the high. Micron, we wait for the first half hour, we see if it's moving higher and filling the gap or moving down, and we take it in whatever direction it's breaking the low. But we're going to give it the first half hour to see what the high and the low is before we do that. Now, folks, I've got something important for you. Oh, top ETF, it's easy. Energies. And the option, by the way, my bargain hunter currently has this. So just FYI. Go about 20. No, that's too long. Go about 16 days out. And buy the 91, go in the money. Buy the 91 and don't sell anything. Just buy the 91. Now, If it doesn't continue moving higher, it's a momentum trade. It's moving in our direction. If it doesn't continue moving higher over the next 2-3 days, you don't want to be in this. You don't want to be in this. So if it doesn't start breaking out the high and continue going higher, you don't want to be in it. Now, in case you missed the world premiere yesterday, don't worry. There's still plenty of time to take action with Celeste Linman, groundbreaking new tool that's set to change the way you view the stock market forever. That's right, forever. Unravel the secret behind straightforward green and red arrows and tap into the mysterious dark force, driving stocks higher and lower. Say goodbye to hours dissecting technical data or hunting through the latest news. That's my job. It is my job. It's true. I was going to say, let me do that. Instead, relish life's cherished moments knowing your investments are working efficiently and intelligently. This is important. This isn't merely a strategy. It's a transformation trading method. And Celeste is a pro's pro. I taught her some stuff too. That's right. The big reveal may have already happened, but Celeste is just getting started. She's just getting warmed up. Click the link below and check out her brand new strategy. She's been on fire. Her S3 strategy, Jack's S3, Celeste's Monday turnaround, they've been doing really, really well. Get in on this. Check it out. Follow the link below. Check out all the goodies and check out my Telegram channel and post me some comments. Bye. Let me know if I'm helping you out. I want to know if this is helping you.